Good morning, everyone. This is Brad Matheny again. What a wonderful move we're having here with this carry of this rally trade. And it's playing out very, very well. You can see the market's just now rolling into this rally mode. Let me move this here and come back over here, the 30-minute, and you can see this extended trending right up off of this channel line, this yellow channel line moving solidly upward. We're about to hit up into my consolidation area here. So this area, I believe, is going to be fairly solid resistance, 544, 545. But if we rally up above that, I got to tell you guys, if we rally up above that, we're going to probably make a fairly solid quick trend up into this area, the 552 to 555 area, fairly quickly. That's the next big level of resistance. And if we rally out of this mode, maybe something like this, very likely we're going to see this thing push upward into this 552 to 555 area. Probably this 550 to 552 area being the initial real resistance area. Okay, so I was asked by one of my friends and clients to discuss, this rolling trend about what we have with this temporary bottom and what we have with this counter trend and an inside breakaway, particularly around this temporary bottom, which sets up on a Sunday. So understand that the broader context of my research consists of, a lot of proprietary research and a lot of proprietary indicators. I don't think I have them here. Nope, this is the wrong one. But most of my proprietary research centers on price modeling systems and then custom indicators. I've gone through some of them before. I think I can get to them here. So let's go here and here and here and here and here. Okay. So a lot of my proprietary research comes from the ability to pick and identify market trends. This is some of my proprietary research. It's done as what I call custom indicators or custom indexes, done in TradingView. I have dozens of these pages saved and set up. This is the SPY base trend index, which measures US dollar strength compared to general markets. We have the SPY setting here, big, deep, low. I wrote to my subscribers, vortex rally conditions are set last week off this big, deep low, partly because we had seen this deep rotation here in the smart money index, which is indicating, as you can see, these lows down here below 40 or 50. Those are typically what happens, like you see here, in an uptrend. You stay away from this upper channel and you bounce off this lower channel in an uptrend. When you get into this upper channel, that's when we start to see a rotation in price. It's almost like as soon as we get up into this upper channel, you could see a major rotation in price. And these are like bouncing trends. So when you see here, we're in this downtrend, we came up, bounced down, came back up, bounced down, came back up. This was the low, the deepest low. Then you can see we rolled through a period of consolidation right here, sideways. And then we rolled into our last little bout of consolidation right here. And since then, we've been in upward trending. So this move right here, this low, set up a very good bottom move, in my opinion. Now, there's other data that I use as well. For example, this that highlighted we move back into a potential speculative phase. This is a monthly market ratio chart. You can see the big speculative bubble that happened here after COVID. This was a pretty solid move. This was the speculative move at the end of 2023. This is all of 2024 here. Moving into a bit of a speculative trend here in July and August. And I think this upward move bodes very well for the US stock market. And lastly, let's come back over to, well, two more charts. So we will look at the US stock market index called the valuations index. The valuations index to me indicates when stocks are perceived to be a good value. And when they are perceived to be a good value, you will see this valuations index climbing. When they are perceived to be overvalued, even though we could be in an uptrend, they're perceived to be overvalued, you will see that we move into a downtrend. So here's again December, November and December of 2024, 2023. Here is the pullback through the beginning of this year, and here we have valuations increasing. To me, this means that stocks, US stocks, are perceived to be a value. Money should be flowing into them. And then we have back here the volatility index had come down for a deep low, a really deep low last week. Vortex rally, deep V, base is set. This is very unusual type of pullback. Big, strong rotation back up into bullish trending. We need to see this continue to rally up into this area, which it looks like it's going to do if the market keeps rallying forward. But again, with all of this data, guys, with all of this real proprietary data, the valuations index, the custom cash flow index, which showed strength last week. You have the fear index, the sentiment index, which was a huge engulfing bullish. You have the master accumulation phase index monthly, which is now in bullish trending. This is inverted. This is bearish all the way through here, went bullish right here. We're now in a pretty solid uptrend, just like you saw right here. And we could continue to melt downward through this cycle. So remember, a lot of my research is based on what I see on these charts. And a lot of my research is then transpired into what I believe is going to happen on the cycle pattern. So let's go back here to the cycle patterns and let's look at this. We're having a rally day today. I think that the 544 to 545 area is going to be a pretty solid target, maybe a bit higher. If we do get above the 545, 546 level, we're going to probably see a counter trend tomorrow, a bit of a pullback pause. Then we get the inside breakaway in trending mode, trending being bullish at this point. I expect Friday to be an upward trend. Then Saturday, no trading, Harami line, which means pausing. Temporary bottom would typically be a temporary bottom, kind of looks like this. So if you go to an area, well, let's see if I can come here. I may have no lines on here. Okay, so here's like a temporary bottom. A temporary bottom is a move downward that rolls into a base and then consolidates and move upward. It's not a real big, deep bottom. It's more like an intermediate bottom that sets up, just rolls kind of like we had right here. Not a very deep bottom. So this pattern here, if I were to look at this temporary bottom on Sunday, which again, Sunday's patterns, the way I look at the weekend is they're really characteristics that set up for Monday's type of trending. So I think we're going to be in a pullback mode tomorrow, the 15th, moderate pullback, inside breakaway to the upside on Friday, gap potential, gap 22 potential on the 19th in trending mode. I think that could be a very strong upward bar depending on what happens on the weekend. Bozu trending in counter trend mode. Okay, this is potentially a large range bar where the open equals the high or the low, and or the close equals the high or the low. That's what a Bozu means. And then we have a topping pattern. So this topping pattern sets up after a Bozu trend. So again, how does that work? Well, a Bozu trend sets up a top, sets up a flat down, sets up a Harami inside. So if you look at this gap potential potentially being to the upside, a Bozu bar potentially being a potentially large range or medium range contraction bar, A topping pattern is the opposite of a temporary bottom. A topping pattern is kind of like this, setting up a top and then rolling downward. So understand that a top pattern means we rally to a peak and then roll downward. A bottom pattern means we move down to a low and then move upward. That's what a bottom pattern is. So when we look at this, moving into the weekend and moving through this carryover, if I were to come in here and try to draw on this 30-minute chart, what I think is the most likely outcome, we would basically be this. Let me shrink this out, set this up, bring it down into trending mode. And so now we're moving out into the 15th, 16th, 17th, 18th, 19th. So we basically have a rally phase that's setting up today, likely up into this area here. Then we have a carryover, counter trending, inside breakaway, gap, Bozu top. So what we would have here is a moderate pullback potentially tomorrow, possibly back down into this area, maybe not so deep. Then a breakaway pattern, which would be over in this area, rallying. That would be Friday, maybe up into the 555, 552 area, a little higher. Then we end up in this gap potential, Bozu trending, top, flat down. The gap potential could indicate a very strong move higher. Then we get the Bozu trending, which would mean either opening on its high or closing on its low or both. Then we end up with a topping pattern, flat down, and Harami. Topping pattern would be a move back to the upside. Oops. Setting up some sort of a peak. And then a Harami inside, which would be consolidation for the next couple of days. So in reality, this is what your move looks like. So I'll try to draw it. And so we have this rally today, possibly up to here, a moderate pullback tomorrow, maybe finding support in this area, a rally back up, continued with a gap here. So we're going to get the gap, rally up. Then we get the Bozu bar. Then we get the temporary top, which may reconfirm here or move a little higher. Then we get consolidation, which will be in this area. And that's essentially what you're looking at over the next, 5 days? 1, 2, 3, 4, 5, 6, 7, 8. Over the next 8 days. So, and again, my range for price could be, we could see price way up here. We could see it rally through this entire mode way the heck up into this area, 5,800 maybe on the S&P. But I'm drawing what I think is more realistic based on my expectations. And as you've learned, if you followed me enough, the trending may be about right, but price may be way up here, or this topping pattern could be way up here. This pullback area could be way down into this area. So my ranges may not be correct, but the expectation of what price may likely do should be about 70, 80% correct, given my knowledge of the cycle patterns and how they work. So again, where we're at right now, we're moving into this rally phase, and then we have the gap potential. Let's follow this, because let's pay attention the next couple of days. We have this rally today, carryover and counter trend mode, and then an inside breakaway. And that's what I'm trying to draw here. A rally today, a carryover and counter trend mode, maybe wiping out everything we gained today, maybe a little less. Then we get that breakaway pattern back to the upside in trending mode. Then on Monday, we get the gap potential, which shows that we could see a gap potential and a potential rally, or a gap potential and some sort of a pullback. It's really just telling us that we have a gap potential in trending mode. So again, trending mode leads me to believe we're going to have a gap potential to the upside and a follow through rally because we're in trending mode. Counter trend mode goes against trend. Trending mode goes with trend. Carryover is kind of like coasting in the same direction of trend. So trending is like acceleration typically. Counter trend is hitting the brakes. Typically, whatever the current trend is, which is up. And then carryover is like coasting in the same direction that we have trending in. Okay, so that gives you a little bit of an idea of what we're looking at. Again, you can kind of see here over the next 8 days. Looks like a pretty solid rally today, possible pullback tomorrow, big rally potentially on Friday, gapping move potentially on Monday upward, Bozu bar here on Tuesday, topping pattern on so it's Monday, Tuesday, Wednesday, and then sideways consolidation into Thursday and Friday. And I think this is going to be a nice solid move for everybody. Okay, guys, talk to you later.